Welcome to the debate. When you build a house, you generally, keep the plumbing entirely separate from the security system.
Right. The pipes are just there to keep the water flowing.
Exactly. And the alarms exist to keep intruders out. But what happens when you decide the pipes themselves need to act as the alarms?
Well, you risk breaking the pipes entirely, right? And suddenly your whole house floods.
Spot on. Today, we're examining a massive shift in U.S. policy doing exactly this, attempting to merge immigration enforcement directly into the nation's financial and tax systems.
It's a huge, huge shift.
It really is. But before we get to the core of the issue, just a quick piece of housekeeping. Please take a moment to like, subscribe, follow, and turn on the notification bell so you never miss our analysis.
Yes, please do. And we also have a mandatory status update regarding the Martin Stevens versus OpenAI matter.
Right, and please note that this is not a lawsuit yet. We are currently in a voluntary quiet period, which was requested by Martin Stevens to pause releasing new public information.
And crucially, we want to clarify that we do not know if any settlement progress has been made.
Right. We absolutely do not want to give the impression that settlement discussions are underway. We don't know that. We can, however, report that the dead man switch has not been activated.
Which means Martin is physically and legally safe.
Yes.
All right, so back to the pipes and the alarms. We are looking at a pretty unprecedented wave of recent policies.
Yeah, it's a lot all at once. It is. We've got President Trump's executive order increasing banking scrutiny, Senator Tom Cotton's Know Your American Customer Act, the DOJ and CFPB's withdrawal of fair lending guidance regarding non-citizens, and the recently blocked IRS DHS data sharing program.
It fundamentally rewrites how the federal government views the utility of our financial infrastructure. I mean, completely changes the paradigm.
So the central question we're tackling is this. Do these policies represent a necessary alignment of financial regulation with immigration enforcement to, protect economic stability? Or do they undermine the safety of the broader U.S. financial system by driving populations underground?
That's the core tension, yeah.
Right. And I argue these measures are essential. They restore structural soundness to the banking system and, crucially, prevent it from facilitating illicit activity.
And I argue the opposite, honestly. Weaponizing the financial and tax systems for immigration enforcement, it creates these severe chilling effects that actually threaten national economic stability and public safety.
Well, let's start with my perspective, which really focuses on accurate risk assessment and, frankly, the rule of law.
Okay.
Let's look at the DOJ and CFPB withdrawing their joint statement on the Equal Credit Opportunity Act, or ECOA. For years, federal guidance essentially pressured lenders to turn a blind eye to a credit applicant's immigration status.
They warned that factoring it in could trigger fair lending penalties.
Exactly. But if a borrower faces potential deportation and a total loss of their U.S. wages, well, that directly impacts their ability to repay a loan. Forcing banks to ignore that is just financial malpractice.
I see where you're coming from on the underwriting side, but
Let me just add, Senator Cotton's bills is a logical extension of this. Access to the FDIC-insured banking system is a privilege. Banks must verify legal status to prevent the system from harboring illicit networks.
you're calling it risk assessment. But I see it as systemic harm. I really do. These policies actively damage the institutions they claim to protect.
How so?
Take the federal judge's recent injunction against the IRS DHS data sharing program. The judge pointed directly to federal confidentiality laws, specifically Section 6103.
The taxpayer privacy provisions.
Right. The government has strict rules protecting taxpayer data for very good reason. If you breach that trust, millions of people just stop filing taxes altogether.
But we're talking about unlawful presence?
Sure, but sweeping banking restrictions risk debanking millions. If you push these individuals out of the formal banking system, they don't just leave the economy. They're forced into an untraceable cash economy.
Which is a separate issue from...
Well, no, it blinds regulators and makes the country objectively less safe. It's all connected.
Let's stick with that credit risk element for a moment, though. Because if an actuary is writing a life insurance policy, they can't legally ignore the fact that you're, say, an avid skydiver.
Okay.
So why should a mortgage underwriter be forced to ignore that a borrower could be legally barred from working in the U.S. tomorrow?
Because it's not a direct equivalent.
I mean, extending a 30-year mortgage to someone without work authorization forces law-abiding citizens to subsidize high-risk loans. They pay higher fees when those loans inevitably default upon deportation.
The problem is that the math on that broader risk just doesn't add up. And the banking industry itself has been screaming this from the rooftops.
Have they, though?
Oh, absolutely. When the president's executive order initially proposed mandatory citizenship data collection, bank executives pushed back incredibly hard.
Sure, but
They warned the administration that mass debanking poses a far greater structural threat to the financial system than, individual credit defaults ever could.
I think the banks just want to avoid the administrative burden. Verifying individual taxpayer identification numbers, ITINs, and foreign consular IDs takes work.
No, it's not just paperwork. They want to avoid a liquidity crisis.
A liquidity crisis from undocumented accounts?
Yes, if millions of undocumented workers suddenly panic and rush to withdraw their money from the traditional banking system all at once, you introduce severe liquidity shocks.
Which is a speculative scenario.
It's enough of a risk that the final executive order was watered down to a mere advisory on red flags rather than a hard mandate. They realized the medicine was going to kill the patient.
Well, Senator Cotton's Know Your American Customer Act actually tries to thread that exact needle. He says, fine, keep the existing accounts so we don't trigger a massive bank run, but let's lock the front door for new accounts.
A grandfathering approach.
Exactly. It grandfathers in current clients while making it a federal crime for illegal aliens to open new ones. I mean, we have Chinese money laundering networks using U.S. accounts to wash hundreds of billions of dollars tied to cartels.
Right.
Banks just cannot serve as conduits for that. It's a huge national security vulnerability.
But locking the front door guarantees those illicit networks thrive. Let's walk through what actually happens when you debank someone.
They leave the country?
No, an undocumented worker just can no longer get direct deposit. So they get paid under the table in cash, or they take a physical check to a predatory check cashing storefront.
Which is unfortunate, but
They walk home with a pocket full of hundreds, effectively becoming a walking ATM for cartels and extortionists.
I think that's somewhat dramatic.
It's the reality on the ground. And more importantly, none of that money is traceable anymore. FinCEN, the Financial Crimes Enforcement Network, relies entirely on suspicious activity reports from banks.
Right, SARS.
Yes, to track human trafficking and laundering. If you ban these individuals from the formal banking system, you are actively blinding FinCEN.
But that assumes the ultimate goal is just tracking money. It's not.
What is it then?
The goal is to completely choke off the utility of being in the country unlawfully. If you cannot get a bank account, cannot access credit, and cannot easily store your wages, well, the incentive for unlawful entry diminishes dramatically.
You're talking about deterrence, but the collateral damages the integrity of our core institutions. Look at the IRS DHS data sharing program we mentioned earlier.
Okay, let's look at it.
The fundamental bargain of the IRS has always been this: tell us about your income, pay your taxes on it, and we won't call the cops on you.
Which they did for years, yes. The government actively encouraged undocumented immigrants to file taxes using ITINs.
Right. And by breaking that promise and feeding that data directly to DHS, the judge ruled you create an immediate urgent chilling effect.
But it's about enforcement.
Voluntary compliance collapses. You are literally cannibalizing the IRS to run an immigration sweep.
I have to push back on the structural priorities here. I see why you prioritize the collection of taxes, but shouldn't the government's mandate to enforce immigration law supersede the IRS's desire to collect revenue from unlawful employment?
It's not just about revenue, though.
But wait, that Treasury and DHS initiative, it ran 1.2 million records and yielded 47,000 matches. That is incredibly effective law enforcement. Optimizing tax collection on an inherently illegal act just seems completely backward to me.
Like I said, it's not about optimizing revenue. It's about not breaking the underlying privacy laws that make the system function for everyone.
But it's an isolated demographic.
Privacy doesn't work like that. If citizens and non-citizens alike start believing the IRS will just hand their private data over without a specific criminal warrant, the entire national tax system suffers. It relies on trust.
Well, we've covered a lot of ground. I think, from my standpoint, bringing immigration status into underwriting and account verification is just a necessary evolution.
I obviously disagree.
Right.
but it protects the financial ecosystem from unquantifiable credit risks, and it prevents our banking infrastructure from being exploited by illicit cross-border networks.
And to summarize my side, turning banks and tax bureaus into immigration enforcement arms compromises our financial visibility. It undermines the fundamental privacy laws that keep these systems functioning.
Which you see as a larger threat.
Exactly.
It ultimately threatens economic stability and public safety far more than it helps.
Well, regardless of where we land, the U.S. financial system is clearly grappling with a monumental operational challenge in handling undocumented populations.
That is absolutely true. The operational reality on the ground is intensely complex.
Right. And regardless of the regulatory path forward, the banking sector faces massive hurdles.
Yeah, the core disagreement is just whether integrating enforcement strengthens the nation's financial integrity or irreparably fractures it.
Exactly. There is certainly more to unpack here, particularly the overlapping legal frameworks of ICA, the Bank Secrecy Act, and tax confidentiality.
It is a regulatory landscape that is constantly shifting beneath our feet. So, yes, a lot to keep an eye on.
Absolutely. I highly suggest our audience follow the ongoing legal battles, especially the future of that preliminary injunction against the IRS.
Definitely worth monitoring.
Before we close, please remember to like, subscribe, follow, and turn on the notification bell so you can join us for future discussions.
Thanks for tuning in.
So we leave you with this. If you wire the security alarms directly into the plumbing, do you finally secure the house or do you just guarantee a flood?